And welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. You're watching Stocks in Focus, and one company or one sector that is in focus is the sugar pack. In fact, a good momentum that is seen in terms of as stock prices are concerned. But from a consumption perspective, what's in store for the sugar companies? Joining us on the show to discuss more is Mr. Atul Chaturvedi, Executive Chairman at Shree Renuka Sugars. Good morning and welcome to the show, Mr. Chaturvedi.
Thank you. Thank you very much for having me on your show.
Always a pleasure to speak to you. Mr. Chaturvedi, firstly, congratulations on the foray that you've made in the UP market with the acquisition. If you could help us more in terms of, why Anamika Sugar Mills, how will it actually bolster growth with regards to Shree Renuka?
Well, in fact, if you have a look at the Renuka's asset base, we are largely concentrated in the state of Karnataka and Maharashtra. So we had to necessarily de-risk our business geographically, and that is the reason why we have gone to UP. So we have a brand called Madhur, which is the market leader in the country, and sending Madhur from Western and Southern India was a logistical nightmare. So it makes more sense for us to be present in the most populous part of the country, and which is also a very good cane belt. And the other thing which we've seen over the years is that UP cane is relatively stable, unlike Maharashtra and Karnataka, which depend heavily on the monsoons. As this year, we are already witnessing that August rains were not there, and that is probably going to be affecting the production in these two states this year. So that is fundamentally the reason why we've gone to UP.
Right. And with this UP-based acquisition, by how much does your cane crushing capacity increase to on an overall basis?
A cane crushing capacity in Maharashtra and Karnataka was close to about 6.2 to 6.3 million tons. And now with this acquisition, I think we will be in excess of about 7 million ton plus. So it could be closer to about 7.25 or 7.3 million tons, thereabouts.
Right.
But crushing capacity is all dependent on the availability of the cane. If the availability of cane is improved in Karnataka and Maharashtra, the same capacity would be sufficient for 8 to 8.5, 9 million tons.
Right. And will the plant in UP also produce ethanol?
As of today, it doesn't have an ethanol, but going forward, we certainly would be evaluating and deciding on ethanol, because as a company, we have been focused on ethanol big time. In fact, we probably may be the biggest producer of ethanol in the country, and we see no reason why we should not produce in UP as well. But we would be evaluating after the season.
Right. Now, from there on, another aspect in UP is always how the SAP prices move, right? What's the latest on that? And being election year, if SAP prices are increased, how do you see it impacting sugar mills specifically based out of UP?
Honestly speaking, we are novices in UP. We will start learning the ropes once now we will be running in this season. We really don't have an idea as to how the SAP is going to be announced. But my take is that whatever we were hearing that 250 rupees is going to be the increase, but that doesn't seem to be happening, because at one point, at one side, the government is grappling with higher sugar prices and inflationary pressures on the food basket. And on the other, if they jack up the prices that much, so it's going to get reflected in the sugar values. I think the government is probably debating, and maybe they might err on the side of more caution. We don't know for sure.
Right. And overall, if you see in terms of sugar prices from here on, what's the trend looking like? Because what we've seen is not only in the global markets but also in the domestic price market, the sugar prices are on an increase. What's the sense you're picking up? Because world sugar commodity prices are up almost 50 to 51% in the last 1 year. How does India stack up as compared to the world prices? And number two, how do you see it moving ahead? Because it is the festive season as well. Demand is high. We are talking of the production or yield which could be lower this sugar season as well. So how are all of these elements actually stacking up from a price perspective?
No, internationally, sugar prices have been on the boil, and that is largely because uh, Thailand seems to be having a poor crop. India also doesn't seem to be having a good crop, and the world markets have already discounted that. And Brazil alone cannot fulfill the needs of the world, and more so with Brazil also having a fantastic soya crop at close to about 156 or 157 million tons of uh, soya. It's a logistical nightmare in Brazil. In fact, our take is that Brazil cannot be exporting more than anywhere between 2.5 to 2.75 million tons of sugar every month. So that is not going to satisfy the world. And with India out of the world market for the time being, we must understand that in the last 2 years of our export campaign, India has actually exported close to about 17.5 million tons. So the stock burden or the stock pressure which India used to have is probably no longer there. And that is also getting reflected in the Indian domestic values. But having said that, the sugar sector in our country is heavily regulated. So Indian prices can only inch up and they cannot go through the roof for the simple reason that uh, we are a very, very regulated sugar sector. My take is that Indian sugar values would remain relatively firm, but they cannot go through the roof. The delta between domestic sugar values and the international values as of today could be more than 20 rupees a kilo. Indian values are in the sub 40 rupees range, 37, 38, and the world values would be closer to something like 64, 65 rupees a kilo. But with exports not likely to happen, and we don't see exports happening from India, the sugar value should remain more or less around the same level. And the sugar season, there should be absolutely no issues because sugar availability is not an issue. And come November first half, we would start having the sugar from the new season coming into play.
Right. So, Mr. Chaturvedi, an interesting take over here is that yes, international sugar prices are elevated. Domestic sugar prices will remain firm but will not mirror world sugar prices. Taking this into consideration right now, the demand is enough to meet the domestic, the production is enough, I would say, to meet the domestic demand as well. But with all of this said and done, how do you think financials will get impacted? Do you think a sugar mill which is doing ethanol plus sugar is slated to benefit or remain stable as compared to a sugar mill which is only doing sugar in such a scenario? Does that balance it out?
My take is that India is committed to 20% ethanol blending by 2025. And our Prime Minister is actually spearheading the biofuel interventions in the world. So I don't think that India will cut down on the ethanol play. And my take is that ethanol values will necessarily have to be raised a bit to make it more competitive compared to the sugar values. And I see no reason why companies which have both ethanol and sugar should not benefit. In fact, if they have both, they're bound to benefit.
Right. So currently, if you see in terms of ethanol produced from maize, I think the last revision was made in August 23, 62.36 per liter is what OMCs pay. Is that a good price, or do you think an upward revision is mandated or necessary, I would say? And if yes, how much do you think it should be?
You're talking about the maize ethanol, right?
Yes, yes.
I'm not too sure because we do not follow maize that closely,
Okay.
and we have still not converted any of our ethanol plants to handle grain as well. But with grain prices moving northwards, it will always be a challenge to uh, fill up the demand for grain ethanol. In fact, if you look at the government's target, by 2025, they expect about 4.66 billion liters from the grain sector, which includes maize as well, and about 5.5 from the sugar sector. The sugar sector, I think, has the ecosystem in place, and it should not be an issue to supply 5.5 billion liters from the sugar sector, and maybe even 7 billion liters. It's not an issue as far as sugar is concerned. But to ramp up the capacity as far as grain is concerned, and with grain prices being on moving northwards, it will be a bit of a challenge. As of today, the ratio between sugar and grain ethanol, including maize, is 80-20. 80% is being supplied by the sugar sector and 20% by grain. So ramping it up, it will always be a bit of a challenge.
Right. So if you have to look at sugar, ethanol from sugar as well, it's at, I think, 65.61 per liter. If I'm sorry, that's the ask, or that's the current one. And the ask of the industry was to raise it to around 69 to 70 rupees per liter. Right. What's the status of that? And do you think the government will be able to increase it? Because the other aspect that comes into play over here is you have crude also, which is on the boil, right? So it's a catch-22 situation for the government as well.
No, it definitely is a catch because on the one side, they are fighting inflation, and on the other side, they're committed to reducing carbon footprints in the country. So my take is that the government will definitely increase the price of ethanol, and in any case, it should probably get done before the start of the crushing season. And most of the ethanol prices become relevant effective 1st of December, because till now, till end of November, the last year's values will remain valid. So I think what will be the quantum of increase, we are not very sure, but definitely increase is on the cards.
Right. My last question to you is, taking all the aspects into consideration, from the yield to pricing to what's happening in the industry right now, will FY24 be able to mirror the past years of success that we've seen, or do you think it could probably be a downer for the industry as compared to the previous years?
No, I see no reason why the industry should not perform well, because if you look at the overall sugar scenario in the country, if what we have lost out or likely to lose out in Maharashtra and Karnataka will be compensated by increase in UP. And when we should not forget one thing, that the area under sugarcane has also gone up quite a lot, almost something like almost 500,000 hectare has actually increased. So overall, that will also get reflected in the availability of cane. So my take is that sugar sector, or rather I would much rather prefer to call it as the energy sector, still would continue to do well. And the years to come, it should continue to do well for the simple reason that the ethanol play has become a big game changer, because it ensures that the sugar produced during the crushing season need not be carried fully for the off season, and that is helping big time the cash flows of the sugar sector. And the interest burden is getting reduced. So I think sugar, or rather the energy sector, is likely to remain. And
Right.
go to the extent of saying it's a green energy sector. It
Absolutely.
should remain in focus. Yeah.
It will absolutely remain in focus as well, and it is the festive season. So, from a consumption perspective as well, we are seeing some good growth coming in there. Thank you, Mr. Chaturvedi, so much for joining us on the show. It's always a pleasure to speak to you and get insights for the industry as a whole. Stay safe and speak to you soon again. Thank you.
Thank you.
So that's
Thank
the
you very much.
management of Shree Renuka Sugars clearly indicating to us what's in store for the industry as a whole and indicating that FY24, in spite of all the challenges, does not seem to be a worry for the industry, and the prices will remain firm in India but will not mirror the global market prices as well. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.